Hello, beautiful people. This is Adrian, and welcome again to Mortgage Cafe Northwest, where I'm trying to bring you the latest information regarding everything mortgages. And today's April the 2nd, Thursday. So I thought what I would do this week is answer some of the common questions I'm still getting on a daily basis. So, question number one, I thought the feds reduced the rate to zero, and why can't we get a 0 or close to 0% mortgage? Sorry guys, it doesn't work that way. The feds reduce the rate for them, the lenders, not for us, the consumers. On the contrary, when they did that, we saw rates increase that week quite a bit. What the Fed has started to do as of March 16th is they've begun purchasing mortgage-backed securities. Now that has created some stability, some type of stability to interest rates here just this week. We've started to see that stability start to happen. So they are doing that to try to create the stability to interest rates in combat everything that's going on with the coronavirus. So we are seeing still really low interest rates, great interest rates for your conventional 30-year fixed loans. Anytime you get outside of a 30-year conventional loan with decent credit scores, now you're getting outside the box. And the further away you get from this box, the harder it is going to get a loan for yourself, or the higher the interest rate you're going to get. So that's what's going on with rates right now in terms of you cannot get a 0% mortgage. I'm sorry to give you that news, but rates are still doing really well as the Fed does continue to buy mortgage-backed securities. Okay, so that's the first question. The second question that we've seen quite a bit, what happens to our mortgage if the bank fails? Well, you're not out of paying a mortgage. Unfortunately, you still have to pay your mortgage. What's going to happen is that bank is going to sell your loan to a different servicer, and that servicer will continue to collect the same terms, same interest rate, same payment, everything. It's just a matter of who you're sending your check to. And that's happened throughout the history of mortgages where, the person that you started out with may not be the same person that you currently have. It may have changed hands to different services throughout the time that you've had the mortgage. It's the same thing. Nothing will change with your mortgage. Everything will stay the same. It just gets sold to a different servicer. So the next thing that we're seeing a lot are changes to the guidelines. Guys, if you're a little bit concerned about the future of your employment, if you're a little bit concerned about the hours that you may be getting from work due to the coronavirus, they cut back your hours, or maybe they're going to lay you off. Imagine that same concern throughout the industry for millions of people. Banks are absolutely worried that if you're buying a home today, this month, or next month, or anytime soon, that your employer may all of a sudden decide to cut down your hours, or even worse, to lay you off. And so what if you bought a home or in the process of buying a home, and then all of a sudden those hours get cut back? Well, now that changes your ability to make that payment, which is a huge concern for yourself and also for the banks. Okay, so what they're doing is they're making sure just before closing, some banks are ruling out different guidelines, but really what they want to do is they want to make sure just before you close your loan that you still have full employment with full hours and nothing has changed with your income. And they're going to do that all the way down to the home stretch of closing your loan. So it is imperative, it is so important for your success and for the success of your loan to communicate with your lender who the right person to contact is at your company, who can send an email or send a form that verifies nothing has changed within the last 30 days, 60 days with your employment. And so have that contact information, because that's one of the things that we're struggling with as lenders, is we're struggling with making contact with that HR person or that manager that can make that verification. Maybe the office is closed temporarily, or maybe they're not in the office, they're working from home. I don't know, but if we can't make that contact, Now we run the risk of not closing your loan on time, blowing your locked interest rate, and causing a world of headaches for you, for your transaction, and everyone else involved. So your help is absolutely needed with that lender to make sure that we have the right contact person. Along the same lines that we're seeing, because of the coronavirus, we're seeing lenders say, well, maybe we can't get in to do a full appraisal. Maybe what we need to do is if the property qualifies, and not all properties, not all transactions are equal, and not all of them qualify, guys. And this is for you, the consumer, and also you, the realtor. That what is possible is an exterior only appraisal. They go out and they make sure that everything looks like it's a livable home. As long as everything matches and everything's lined up pretty well, they're gonna create the appraisal based on just the exterior without putting anyone inside the risk or the appraiser at risk of contracting coronavirus. Okay, so that is for purchases and refinances. Again, not every transaction qualifies. It depends on the type of property. It depends on also the loan to value and the type of loan. So talk to your lender to make sure, or preferably us, to make sure that you do or do not qualify for an exterior only, or maybe an automated appraisal if possible. Okay, so that's another thing we're seeing in the industry. And of course, the other question that everybody asks is, what do I think is going to happen with the future of interest rates? And the reality of it, guys, is we just don't know for sure. Because yes, it's possible that interest rates go down, let's say in the next 2-3 months, maybe, right? As we continue to see some economic issues going on with people losing their jobs, but at the same time, those same issues may cause lenders to continue to not have the appetite for these loans because they don't want to close a loan where someone is going to lose their job and not be able to make the payment. So those rates may stabilize where they are. So if you wait, what if you lose the opportunity to get the nice low interest rate that's available to you today by waiting and miss out on the opportunity? So what if the cost of waiting for the next 3, 4, 5, 6 months doesn't outweigh the savings that you can have starting now? So take that into consideration when you're looking and talking about purchasing or refinancing your home. And lastly, guys, the one benefit, the huge benefit, not the one, but the huge benefit of Mortgage Cafe Northwest is that we are a mortgage broker. We don't work for a corporation. We don't work for a bank. We have several different lenders that we have partnered with. And maybe one lender that month, as an example, had a lender this month say, guys, we just don't have the appetite for this program anymore. So we're going to take that interest rate and bump it up by a whole point from 3.875 to 4.875 as an example of a point. And so now that lender doesn't have appetite for that loan program anymore. The cool thing is that we had another lender out of our pool of lenders that go, well, we still want that loan and we're going to do it with a really nice low interest rate for that client. So guys, we do the shopping for you as a mortgage broker, and your situation, your application, we're going to shop it out for you and make sure that you get the best program, get the best rate and fees that we could possibly get for you through Mortgage Cafe Northwest. If you haven't reached out to us, please reach out to us. Let us answer those questions for you. You can follow us on Facebook, Instagram, and also YouTube. Let us know if you have any questions. Stay safe and stay healthy. Look forward to talking to you guys soon. Thanks again.